What if I told you the reason you're not making money in trading has nothing to do with your strategy and everything to do with how long you can stay uncomfortable? Hey guys, Akil Stokes here, and welcome back to another episode of the Trading Coach Podcast. Another video episode, so check out the video version on Spotify or on YouTube. We are going to hop into the charts for a little bit, so the visual experience is going to be a little bit better, but I'll do my best to keep the audio audience engaged as well. Today's episode is going to be a follow-up on the previous Trading Coach Podcast episode that we did on active trade management, where we talked to you about 3 ways to trail a stop loss. So if you haven't seen that already, make sure you put that on the to-do list right after you're done this. And in this follow-up, we're going to shift the focus a little bit and talk about something that really doesn't get discussed much in trading. And even me, myself, has done a poor job of discussing this with you guys. But we're going to talk about how to build your emotional endurance. And it's fitting that I'm wearing my cross-country shirt as I record this, because cross-country athletes, runners, well, we work with them on building their endurance as well, just in a different way, but kind of the same way. Because if you ever ran, you have to deal with massive amounts of pain and negative thoughts for a very, very long time. And usually it's mind over matter. So maybe it's actually more similar than I think. Anyway, this ability plays a crucial role in your active trade management and honestly in any type of trading in general. And I would even dare to say that this is probably the difference between those who can become and remain successful versus those who struggle or maybe become successful for a little bit before giving it all back to the markets. Now, the idea came to mind from a question that I recently got from a trader on our Tier 1 trading platform. By the way, shameless plug, if you ever want to learn to trade with us, www.tier1trading.com. Come in, check us out, live sessions, chat with traders, chat with myself and Jason. It's a great experience. I don't need to sell you any more than that. Just get on the platform and you'll see what we're about. But I'll put the question up on the screen so you guys can see it, but to sum it up, our trader was essentially asking a question about active trade management and saying, hey, how about instead of having a set target 1 or even a set target 2, I simply just trail my stops below price action until I'm eventually taken out? Does this seem too good to be true? Is it something I should try out? Is it something that I'm completely wrong against? And to answer that question, I would say this. Well, first and foremost, you should test every idea that you ever have. That is going to give you the ultimate answer, right? I can tell you something, Jason can tell you something, the greatest trader on the internet can tell you something, your mind can tell you something, but none of that is going to be as important as having the numbers in front of you. So at the end of the day, regardless of what I say, if you have this question, the only true way to build that belief is to test it, look at the numbers, and have them give you the answer. What I can tell you is this. From personal experience, and this is talking from a trader's perspective, so not a long-term investor who's just like buying and holding, someone who's more active in the market, you're probably going to be more profitable if you have some sort of an end game, meaning that usually what happens is when you try to trail forever, you end up losing more money than you would make if you just had a set target in mind. And we have to understand as traders that our goal isn't to get every little bit out of the move. We're not going to get involved at the very bottom and get out at the very top. Rather, we are mercenaries. We are jewel thieves, right? Our job is to come in and take what we came to get and get out before we get got. And we'll head over to the charts for an example of that. So looking at the chart in front of you, we're just going to give a very simple example of a trader that is trading a trending opportunity, and let's just say they're trailing at structure. So we're going to take a look at this move right here. We were brilliant, and let's say we got involved right here. Price action came up, bada boom, bada bing. We retraced and we got involved in the pullback. So I'll give some numbers just so the audio only audience can hear us. We got involved right here. Let's just call it 134.27. Now, we spoke in the previous podcast about a trail stop method that is going to follow price action. So every time price creates a new structure high, we trail our stops behind the previous retracement. So initially, let's say our stop loss is right here below our entry point, the consolidation point of our entry. as price action makes its way up and as we create a new structure high, we are going to roll that stop below that new structure high, or that outside return, by blank amount of pips. And as the market keeps doing that, right, we keep rolling it up. So a new outside return is created, our stops roll up. A new outside return is created, our stops roll up. So our initial entry was at 134.27. Currently, I rolled my stops up to about 136.50. I'll do some quick math by stealing the ruler. We are trailing our stops at 225 pips in the profit. Now, I know that seems grand, but as this trade goes on, price action continues to go up all the way to about 138.66, right? So you can see that price action went from our original number, 134.27, to our high of 138.66 or 68, which is 400 pips. Now, what this means is that at some point in this trade, and I apologize for the glitchiness that's going on, at some point in this trade, we were up 441 pips. I don't want to say in profit because it's never technically profit until we cash out. But in our eyes, big old money eyes, right? We saw ourselves as having 441 pips of profit. The problem is we don't have any end game. We don't have a level up here that says, hey, this is where I want to take targets at because of X, Y, and Z. We are just hoping that it continues to go up. And the problem with this is, well, in order to get stopped out for trails, price needs to come back down. And as you can see, price action ebbs and flows. We have no reason here to move our stop up, if you guys are asking that, because we don't create a new structure high. So this is never technically an outside return. And instead, we work our way all the way back down to our trail stop. So if we do some quick math, I forgot the numbers already, but we were up, quote unquote, up 445 pips. We ended up getting stopped out for 223 pips. We left about 222 pips on the table. Now, on one hand, I know what you're saying. Akil, I still made 220 pips. That is amazing. But traders in this situation don't think about it like that. They don't see themselves as making the 223 pips. Rather, they see themselves as having the 445 pips and leaving the 222 pips on the table. And that's mentally disturbing. I actually used to trade a strategy back in my mechanical system days that was very similar to this, where it was a longer term kind of ride the trend until it bends type of strategy. And it was successful, but it was very tough to deal with because I would constantly have trades where I would be up 600 pips, 1,000 pips. And I'm not even joking. These were big long-term trades, but there was never any set target projection. Rather, there was I was using an indicator-based trail stop. So each and every time I won, I had to wait for price action to be up like 1,000,000 pips and then wait for it to reverse and take hundreds of pips away for me to finally be out of the trade. And although, again, I should have been happy that I still made, maybe 400, 300 pips out of it, at least for the ones that didn't go back to break even, those were painful. The only thing that I can think about is, man, I had 600 pips in the bag and I let 200 get away. I'm a loser, I'm a loser, I'm a loser. And eventually that led to just self-sabotage. I wouldn't trust my system. I wouldn't trust my trail stop. I would exit early. And it was just a dumpster fire. So you want to be careful about that. I think it's better to much rather say, hey, I'm going to have a set target projection. And it could be far away. It could be a home run projection where it's really far away. But at some point, there has to be a technical place in the chart where you think price is going to stop at. And then you kind of get the best of both worlds. If it goes up to that level, you get maximum pips. And if you trail on the back end, you minimize your risk and you even lock in some pips as well. But that's just my personal opinion. At the end of the day, you got to try different stuff out and see what works for you, both from a financial perspective, what makes you the most money, baby? Haven't done that in a while. Sorry, my thing's pinging them on the chat right now. But also what you can deal with psychologically. Now, if you are someone that says, hey, Akil, I can deal with that. I am okay taking pain on a regular basis and sitting in for those big wins, because for every chance that it comes back and stops you out, there are going to be those chances where it rolls up further than what your would-be end game target would be, and you end up making more money. But if you want to do that and you want to consistently put yourself in the position to catch those really, really big moves and actually stay in the trade and not self-sabotage, you need to train something called your emotional endurance. So your emotional endurance is pretty much your ability to withstand and deal with difficult emotions for extended periods of time, but particularly without trying to fix them or without trying to fix how you feel, because that gives us the opposite effect, right? I know it kind of sounds weird because everything we do, and I'm guilty of this as well as a coach, as we talk about fixing your emotions, fixing your problems. What's the solution? How can I avoid this? How can I avoid that? But the truth is, in trading, trying to constantly solve that emotional state is actually going to harm us much more than it's going to help us, even if it doesn't seem like that. You see, one of the biggest issues that comes with having a low emotional endurance is something called an unhealthy avoidance. And this pretty much means that you're either unable or unwilling to deal with uncomfortable situations. So let's bring this back to trading specifically, right? If you can't handle seeing a trade going into a drawdown, meaning you enter a trade and you come back and it immediately is in the red, or watching your profits shrink, like in the example I just gave you where you're up 400 and whatever pips and it starts coming back down to your stop loss, what do you think you're going to do? Are you going to sit there and be happy, feeling uncomfortable, or are you more likely to do something to try to solve that problem? Well, it's our natural instinct to do something to solve that problem. It's our natural instinct to avoid pain, to bring ourselves out of discomfort. And how do we do that? Well, one touch of the button. Boop! I exit the trade. If the trade is going against us, I stop myself out and I saved money because I could have got stopped out for this much, but I only exited for that much. Or I locked in profit and we feel happy about it because, the market could have went against me and I could have given back 200 pips, but I only gave back 50 pips, right? We're convincing ourselves that we took the right action, but it's honestly just self-sabotage. And this type of self-sabotage kind of falls into the next category of emotional endurance, which is called, I don't have a fancy word for it, but let's call it the fear of learning or the negative behavior learning. I don't know, right? But pretty much what it means is this. Every time you avoid a difficult situation, your brain labels it as like danger, right? And as human beings, caveman brain, we are wired to avoid danger. So what happens? Pretty much the more you avoid something, the harder it becomes to actually do that thing in the future. And this reminds me of something personal. You probably have heard me and almost every other trader out there recommend a book called Trading in the Zone by Mark Douglas. It is somewhere behind me. I don't know where it's at, but you got to trust me on that, right? It is known as one of the best psychological books out there for trading. And although I would agree with that, the best bit or nugget that I learned from that book had nothing to do with trading. I learned why I was afraid of dogs. You see, when I was younger, I had one bad experience with a dog. In my mind, it was a ferocious dog that came out and tried to attack me. It was chasing me and I ran away, and that's also how I discovered I was fast. In hindsight, maybe it was a happy dog actually running to me because that's what happy dogs do. I don't know. I was a little kid, so it doesn't matter. Anyway, I was afraid of dogs, and after that moment, I avoided dogs completely, right? And because I did that for so long, all the way into my early 20s, right? My brain turned that one experience into like this massive irrational fear, right? I believe that every single dog out there was out there to get me. I had this scent on me that dogs hated. Even if a dog was like calm, even if it was on a leash, even if it was like wagging its tail and doing the happy dog thing that I see my neighbor's dog do all the time now, I was afraid of it and I would run. And what I learned after reading Mark Douglas's books is the fact that I avoided this fear for so long, it didn't shrink the fear, it fed it and it got bigger and bigger and bigger until I was kind of an embarrassing grown man running from little dogs while all my friends laughed at me. And this is the same thing in trading, right? Now, the last issue that comes with low emotional endurance is procrastination, something that many of us are familiar with. If you know something is going to be uncomfortable, meaning if you know you have a task at hand and you're like, man, like, I don't want to do that because I'm going to feel this way, that way, or whatever it is, well, we tend to do everything in our power to avoid starting it, procrastination, right? And with trading specifically, seeing how it's full of discomfort and emotional swings, right? It's hard, it's unpredictable, it can cost us financially. What do you think most traders do? Well, they procrastinate. And speaking of that, I've just thought of this name right now. There's this category of traders called, or at least I'm going to call them this, professional testers. And what I mean by that is this. They love the markets, they love the journey, they love learning, they love building strategies, they even love back testing, but when it comes time to go live, they freeze, right? So instead of ever going live, what they do is they re-back test something to make it perfect. They develop another strategy so they can build their portfolio. And for the longest time, I would think like, man, these guys are dedicated, these guys are nerds, these guys are perfectionists. But when it goes on for 5 years and you speak to these traders and it's like, hey, wait, you never actually started trading live, you realize that it's something different. These, that perfectionism, that strategy development, that portfolio building is just an excuse. The truth is they are afraid to deal with the hardships that come with trading live. And because of that, they make up every excuse never to trade live. One of my best friends was like this, where he was a brilliant strategy developer. I'm telling you, this dude had tens of like really, really, really good strategies. And I'd be like, man, you're cranking them out. But he never actually traded live. And speaking to him, 10, 15 years later, we had a really deep conversation. And he was like, Akil, man, I was scared to trade. And I'm like, yeah, you were. But it was interesting that he just put in all that work, but never actually benefited from any of the work that he put in. So now that I told you what's wrong with you, let's talk about what you can do to change what's wrong with you, right? How do we actually build our emotional endurance? Don't worry, you don't have to hop on the treadmill or go outside on a bike or anything like that. There's like 3, so we'll stick to 3 methods. 1, use motivational visuals. If you guys follow me on anything social, I love sharing like motivational infographics. I make a habit to find a few each and every morning. It keeps me inspired, it keeps me motivated, and I just think they look really, really cool. But seriously, using these visuals, it can actually help reinforce your reality. It can kind of keep you grounded when things get tough. One of my favorite ones is the one that says like what people think the path to success looks like, and it's like a straight line, and then it's like what the actual path to success looks like, and it's all wavy and curvy. And that's just a big reminder to me where it's like, hey, I'm supposed to struggle, right? The path to success isn't like I should start something now and be good tomorrow. It is I should start something now, I should be bad, and I should get a little bit good, and I should be back where I started, and I should get a little bit better, and I should take 2 steps back. And just understanding that reality of the path helps me realize that, hey, Akil, you're not in a bad state necessarily. You're just a normal human being. One that I used in trading specifically in hindsight was, I hope I can find it and show it to you guys, but it was a chart of kind of the same thing, the path to success. And right before the very successful point, there was rock bottom. And I remember this is exactly how my journey went. I didn't have this visual at the time, but I hit rock bottom, right? It was kind of like the final test right before I got really, really good. And in real time back then, I was ready to quit and do everything bad. But now I use it as kind of motivation to be like, hey, the darkest part of the storm happens before the storm clears out. I have no idea what the appropriate reference is, but I hope you guys get what I'm saying, right? After the worst part is done, then the sun can come out and shine on you once again. Another one is going to be positive self-talk. Now, I know affirmations sound a little cheesy, they sound corny, but trust me, they work. I thought the same thing, and then I started writing them down. I started reading them to myself in the mirror, and I started actually feeling my mindset and my views shift. So, those I am statements, those I believe statements, those I deserve statements, they really work. Also, just changing the way that you say things. So like rephrasing your thoughts can be massive as well, right? Instead of saying something like, oh, this is too hard, right? Tell yourself, hey, This feels hard because it is hard. Accept the fact that, hey, you are doing something that is difficult, and therefore it is 100% normal for it to feel difficult. Another one would be like, instead of saying, oh man, I'll never figure this out, just add one word to it. Say, I haven't figured this out yet, meaning that, hey, you're going through that process of figuring it out, but if you keep working on it, you will get that answer. Things like that seem small, they seem cheesy, but they do make a massive difference because our brain listens to the way we think, and we can program the way we think and the neural pathways and all that fun stuff that I've mentioned in previous episodes. It's real, it's science. And lastly, and this may be the hardest part, you've got to train yourself to be uncomfortable, right? A lot of times we talk about, hey, jump off the cliff and figure it out on your way down, or cannonball into the pool and just splash, right? Maybe not when live money is at stake, right? But rather than run into the pool and cannonball, perhaps dip a toe, right? Put a toe in and then slide a foot in and go up to your calf, then your knee, and slowly inch yourself in that water. Now, again, I said I'm really bad at this because a lot of the time, well, not bad at this, but I'm really bad at talking about this because typically I tend to give solutions where it's like, hey, the way to avoid being psychologically wrecked if you're in a trade is to hit that little X button on the top of your screen, and it takes the screen away and out of sight, out of mind. And yes, there is truth to that, but that doesn't really help your emotional endurance. That is pain avoidance instead of dealing with pain. And if you're someone that needs to be in front of your charts, like a day trader, for example, or someone who's actively trailing, you can't necessarily just close your chart down and let it run. You gotta see what's happening. So I would say this, slowly program yourself to deal with pain. You can start whatever number you want, but here's the example. Instead of being in a trade and avoiding it right away, say, hey, I'm gonna watch this trade for 5 minutes, right? Set a timer, put 5 minutes on there, and exist in the trade for 5 minutes and deal with the emotions of being up and happy, deal with the emotions of being down and sad, and then 5 minutes later, you can get away and do your normal thing. But then next time you do it, maybe it's next time, maybe it's next week, next month, whenever you feel comfortable, do the same thing for 10 minutes and then do it for 20 minutes and 30 minutes. And what you're doing is you're slowly training yourself to deal with that emotional discomfort. And like anything in life, your body will adjust. The more you train yourself to do something, the easier it will get. I don't know how many of you guys saw me on Instagram. I did this over the winter. I'm doing it right now with my track and field team where we're on a path to do a 5-minute plank. And the way to do a 5-minute plank, where we're just holding yourself in position of core exercise, the way to do a 5-minute plank isn't to go for 5 minutes on day one because you're going to catch a sports hernia. You're going to rip up your insides, right? Stressing yourself out. Rather, we're going to add 10 seconds. We're doing it every week with my track team. I think I did 5 seconds every day for me personally. But if you add 5 seconds every day, what it does is it allows your body to slowly adjust. And what you notice is that anyone can hang on for 5 more seconds. It's not a big deal. And before you know it, you've gone from a minute to a minute 30 to 2 minutes to 3 minutes. And it's not even that hard because your body is slowly adjusting to that added time. Trading is going to be the same way. So for all of you asking this question, I get this a lot, Akil, how do I improve my trading psychology? This is it, right? It's not just reading books. It's not just taking courses. It's actually doing the work, and not just doing the work, but doing the work consistently, because change comes from action. And if you want to see massive change, then you've got to take massive and deliberate action. So that's all I got for you guys today. I hope you enjoyed this episode. And hey, if you have any techniques or tips or experience that have helped you build your emotional endurance, or maybe you've heard other people talk about how to do so, don't be selfish. Don't keep it to yourself. Share it with our community here, right? We've got a great community here with the Trading Coach Podcast. Leave it in the comment section below. That way we can read it. That way we can learn. That way we can grow. And until next time, plan your trade, trade your plan. Take care.